Let's talk for a moment, Pete, about Accenture. These guys announced a $4 billion stock repurchase plan, and they expect to return at least $8.3 billion to shareholders through buybacks and dividends, Pete, through 2025, next year. So that's an awful lot of money. I think anytime you're giving money to perfect strangers, like shareholders, as Warren Buffett famously said, I think why not take it, Pete? If they're going to give you free money, if they're going to support the stock and give you big dividend payments, I think a lot of people are making that decision today. Pretty easy one.
And it's quite a statement, John, that they've got these monstrous buybacks. You mentioned it, $4 billion on a share repurchase. I mean, when you look at where the stock is, it's near the 52-week highs. It's up there, call it 350 plus bucks a share. The high is 387. Their new bookings number, I mean, you looked across at what they put out there for us today. $20 billion is the total there for the consulting side. Revenue growth is 2 to 6%. That sounds pretty good. They beat on the revenue. They beat on the earnings. I mean, you couldn't have a much better quarter than what they were able to put up. So for a lot of reasons, John, this one's very intriguing. You also even mentioned the fact that, hey, they're even going to give you a little bit of a pop on this dividend side. So they are sitting in a really sweet spot. By the way, when you've got free cash flow of $8 billion, I would say you're sitting pretty. And that's what Accenture is basically telling all of us right now. That's why it's had the reaction today that it did. Really close to 52-week highs.
Yeah, it's an outperformer. And, if they're going to return money to shareholders, Pete, like I said, I'll take it.